Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, October 17th. Hey, I hope you guys have some great, awesome plans for this weekend. We do got a couple economic news releases scheduled for today. We'll start off with the housing starts for the month of August. So back in July, we had 956,000 new homes or construction started. The forecast for August is supposed to go just above 1 million at 1.015. And it came up a little bit higher than that. So good news right there. And then consumer sentiment for this month, we had 84.6 the last reading. The forecast was supposed to dip to 83.5, and it actually went upwards to 86.4. So overall, very good data today on our economic calendar here. So as a result, of course, we're getting a nice upbeat in the stock market. And a lot of it's also kind of coming off a comment that Fed member Bullard, even though he's not a voting member, but he basically made a comment saying that maybe the quantitative easing is not over yet. Meaning, so as what a lot of people are thinking is that maybe that they won't finish up their buying, because a lot of people believe their last purchase of the mortgage-backed securities will be in October this month for this coming meeting. And it looks like it could be extended, so this might continue a little bit further, because he's kind of looking at the data from Europe and from China, and they're not obviously in a very good position right now. And we're just showing some modest growth. We're not even like really taking off, but we got very low inflation, and of course that is kind of a concern to the Fed as well. So he thinks that possibly they could continue the quantitative easing of mortgage-backed securities, but you're talking about going from 85 billion all the way down to right now they're at about 15 billion. So they could continue that $15 billion purchase or maybe reduce it or whatnot. So that's why the next Fed meeting will be a very big deal as to see which direction will they go. Will they finish it up? Will that be their last purchase, or will they continue, let it roll over, or how they're going to treat it? So be prepared for some volatility later this month when the FOMC happens. Now, also, Janet Yellen had a speech earlier today, but she did not touch on any of the market conditions. So, so nothing was really related to that. But there's also some good earnings reports kind of taken off. So, stock market today is doing really well. We're up so far about 274 this morning on the Dow. So as a result, it's kind of pulling back a little bit on the bond market, which is creating a little bit more of a slight spike in the interest rates. So if you can see over the last, since the 15th, where we had that huge day in the market, where the Dow was down even touching at 400 and they rebounded to only negative 175, we were up about 1 point. There's almost 1 point in difference in pricing. So that could easily translate to about 1/4% in the interest rate. We're still at very good rates. We're just before that earlier in the week, like Monday's, or actually about Tuesday's pricing, since Monday was closed. We're close to about that type of price. So very good pricing, just not the best. And it's hard to say if we'll see that spike again or not. Now, some people believe that the market could continue correcting itself over long term, but that might be a longer term period, and without the government also purchasing mortgage-backed securities, they could just more or less offset one another. But the trend should be for interest rates more likely. We could see an upwards trend where the rates are kind of climbing upwards. We may not really see that maybe towards spring of next year, when there's talk about the Fed maybe start raising interest rates, perhaps later in the year. All right, so just be prepared and act accordingly, so that way if the rates do go up, you're not surprised. All right, folks, you guys have a great weekend. Thanks for watching, and we'll see you guys next week.